I'm Simeon Wallace, Chief Investment Officer of Aprio Wealth Management, and welcome back to The Pulse, where we take a month-to-month look at what's happening in the economy and the capital markets so you make better decisions with your business and with your investments. Stocks rebounded sharply in April, with the NASDAQ and emerging markets each gaining over 15%. Year to date, small caps and emerging markets are leading. That broadening is exactly what healthier markets look like. Bonds have been steady, with high yield leading. While in April, oil gave back part of its Middle East spike. Copper has kept climbing on AI and electrification demand, while Bitcoin has remained highly volatile. Now, for 2 years, large tech carried earnings growth. Now, mid caps and small caps are accelerating. Even the S&P 500, excluding the Magnificent Seven, is finally turning up meaningfully. The premium lenders' demand for risky corporate bonds is near record lows, and bond investors are seeing little economic stress ahead. That keeps financing conditions constructive for businesses. Now, before Middle East tensions, markets were expecting 2 or 3 rate cuts this year. Now, they're expecting 0. So where financing costs are a part of the equation, plan for borrowing costs to stay where they are for longer. Bank loans and leases are growing nearly 7% year over year. When banks lend, businesses expand, refinance, and invest, and that is a meaningful lift for the economy. Along those lines, when new factory orders outpace inventory, manufacturing typically strengthens in the months ahead. The last few months, we've been at multi-year highs. The manufacturing sector is clearly turning up again. Companies order heavy trucks when they expect demand to grow. Orders are running well above the 12-month average. Demand to ship by truck is improving as manufacturers prepare their supply chains for greater activity ahead. Architecture billings lead commercial construction demand by about 9 months, and the index just turned expansionary for the first time in years. That is a real early signal. Americans are starting new businesses at rising rates. The fastest growth is happening in AI-heavy sectors. Business owners are betting real money that this shift is durable. With stronger demand in the economy can come inflation. Goods prices are turning up while services inflation continues to cool. Neither move is severe yet, and we continue to watch closely to see if this broadens. Inflation can be driven by rising energy costs. Oil spiked on Mideast concerns, but the futures curve tells a different story. Traders expect prices to settle back near $70 in the near future. To sum up everything from today, here are the key takeaways. Markets are at all-time highs, with earnings now broadening beyond the biggest tech names. The Fed is on hold, keeping borrowing costs where they are. More importantly, the real economy is strengthening across manufacturing, trucking, real estate, lending, and new business formation. And we are watching goods inflation and oil carefully. With that, I'm Simeon Wallace with Aprio Wealth Management, and I'll see you next month with our next edition of The Pulse.